Hello there, my friends. Chris Marcus here with you for Arcadia Economics, and excited to have everyone at home who is joining us because today we're going to be digging into Fortuna Silver's third quarter earnings, which came in with record production and some very successful financial results, especially on the heels of finally getting Séguéla into production, now a full quarter of production. So plenty to talk about, as well as some other recent news that has been going on with Fortuna. And welcome on in to everyone who is joining us. Of course, today I'm joined by Jorge Ganoza, the president and CEO of Fortuna, Dave Kranzler of Investment Research Dynamics, and Greg Crennan, who has appeared on the show a couple times from Golden Coast Consultants, who is also a fan of Fortuna, and we'll have some questions to dig into. But to get things started, Jorge, congratulations on quite a successful quarter. As we've talked about quite a bit over the past months and years, you've been building the Séguéla mine for 2 years. Now it is up and running, and as you've said, now receiving the harvest from that. So perhaps we could start off and you could walk us through the results and how everything came along.
Thank you, Chris, and for the opportunity to speak to your audience again. Yes, this was I think of it as an inaugural quarter, because it's the first time we consolidate results of our flagship mine and fifth mine in the portfolio, which is Séguéla. We had a record quarter on the back of this. In terms of gold equivalent production, we delivered 128,000 ounces of gold, which is an increment of 38% compared to the previous quarter, to the second quarter of this year. When we look at sales, we had a revenue of $243 million, which is an increase of 53% compared to the previous quarter. When we look at net earnings, we recorded net earnings of $27.5 million or 9 cents per share. When we adjust for one-time events, that comes up to 10 cents per share, beating analyst consensus of around 6 to 7 cents per share. So we beat market and analyst consensus by a wide margin. But more importantly, at the end of the day, how all of this translates into cash. We had a net operating cash flow from operations of $106 million and free cash flow from operations of $70 million, which compares to $9.5 million in the previous quarter. So as you see, in all these relevant metrics for the business, we had significant improvements driven by Séguéla and strong performance across the mine's portfolio.
Okay, and obviously, I know you've been excited to get Séguéla up and running, and curious, how much of this was driven primarily by Séguéla as opposed to changes in any of the other mining operations over the past quarter?
Well, Séguéla was certainly a significant contributor to this. We delivered at Séguéla 31,000 ounces of gold, which we didn't have in the previous quarter. But more importantly, those ounces were produced at a cash cost of under $500 and at an all-in sustaining cost of under $800, right? So not only a significant amount of new ounces, but with industry-leading cost, a low industry-leading cost. Now, we had other good news in across the portfolio. The Yoku Mine in Burkina Faso delivered above our plans for the quarter. It delivered, 34,000 ounces of gold. So that was on the back of higher grades in some new exciting zones we're transitioning through the mine. It reported a low cost for the period of $1,200 per ounce. No, So, all in all the mines across the portfolio performed. This significant increase and change in the complexity of our business was certainly driven by Séguéla and to a lesser degree by Yaramoko.
Yeah, and in addition with that 7.72 grams per ton head grade at Yaramoko, you also increased the guidance, as basically you've hit the previous guidance already in the first 3 quarters, and perhaps you could touch on that one there.
Yes, Yaramoko's been for the year performing above our expectations on the back of higher grades, right? That led us in the previous quarter, so not in the previous quarter, but in the previous production at the end of the quarter, to upgrade guidance, right? So our guidance right now hovers around 120,000 ounces of gold. And we believe we're going to meet that even in the upper end of the range. No? So, it's a mine that continues giving, and we continue exploring aggressively there as well. No, it's one of our, within the portfolio, one of our focus for exploration. And I can only say that we're very happy with the work that the team at Burkina Faso, the Yaramoko mine, is delivering. Yeah.
Well, it certainly has been going well there. And Jorge, something you touched on a few moments ago, did mention quite a decrease in the cost. Here we see cash costs going from 968 to 814, all-in sustaining coming down from 1799 to 1312. Is this a rate at which you think will be steady going forward? Is going to continue to decrease as Séguéla continues to produce? Or what would you be looking at going forward? Any expectations, perhaps in the fourth quarter and beyond, in terms of the cost side?
When we look at this beyond, on the medium long term, I think of what is the average cost for global gold supply from the mines. Those are figures that the World Gold Council provides, right? So today, the average all-in sustaining cost for global gold mine supply hovers around $1,400 per ounce. No, so I want to see Fortuna producing, in that range, in the media, in the average, or below. So in the second quarter, we reported a historic high all-in sustaining cost of almost $1,800. That by no means is a reflection of the business. Our all-in sustaining cost in the previous quarter was impacted by shortfalls in production in Mexico and operational one-time issues in Burkina Faso, the Yaramoko mine. That created shortfalls in production and higher costs. So moving forward, I believe $1,400 per ounce is a good range to think about our ongoing costs on a consolidated basis.
Okay, and certainly with where the gold price stands today is good news going forward. So with that said, Greg, I'd like to pass it over to you, and perhaps you can start with any questions that you have. Greg, you're muted still.
Thank you, and congratulations on another good quarter. As to get investors excited about Fortuna, everyone's always willing to buy into the company when the price of silver rises. But can you elaborate a little bit more on, like you said, just how important gold is to Fortuna going forward, to maybe get more of a sense that you guys are doing more than just silver to attract new investors to the company?
Yes, Fortuna Silver Mines or names, or it's silver is branded in our name. We started Fortuna back in 2004, 2005, with a strong focus on silver, but bear in mind that in those days, silver was trading at $3 to $4. So, yeah, it's part of our heritage for sure. But some years ago, we made the strategic decision to seek growth also in this gold space, not only silver. So that was a conscious, a choice, a strategic choice we made some years ago already. So I'll say that 5, 6, 7 years ago, 70% of our revenue came from silver. We were a much smaller company. Today, that has switched. Today, 78% of our revenue comes from gold and 15% from silver. The balance is zinc and lead byproducts that we get out of our Caylloma mine in Peru. So today we're more a gold producer. But you know what? When you look at the history or the evolution of other companies in our precious metal space that started in silver, usually that journey, as you seek growth, takes you more on the side of gold assets, right? So today we think ourselves as a precious metals producer with a nice silver kicker, and yeah, and, you know, we haven't given up on silver. Last year, we had 12 drill rigs turning, even at the beginning of this year. Out of the 12 drill rigs, 8 were pursuing silver opportunities. You know? So we're still very much focused on silver, but rather than making a distinction between silver or gold, when we look at the assets, we try to see which one has which makes more business sense, which provides better margins, right? This is a business of margins. As we do not control the commodity price, we don't have pricing power in this business. Margins are key, and that's what we focus on within the gold-silver space.
And so following up with that, so you guys are doing a great job as far as, you know, keeping your costs down for gold. You like you mentioned in your margins. Do you think that in the future, if things continue to trend more positively for Fortuna, that you can start issuing a dividend to entice investors to, you know, invest in the company, since there is so many, you know, with higher interest rates, as investors are seeking you know, a safer return and less risk in companies? Do you think that is a possibility if the price of gold or silver rise steadily in the future?
Topic return to shareholders is a topical issue for us, and we also have to recognize that mining is a capital-intensive business. We're just coming out of 2 years of intense investment in the business with Séguéla. And so we now transition into a harvest mode, right? So our priorities with respect to capital allocation, to speak about returns, how are we going to allocate capital in the business? One is lower down our debt. A mining company needs to be run with a fortress balance sheet. So we're not a highly leveraged company. Our debt to EBITDA ratio is a low 0.5 today, but we believe that number should be even lower under different price scenarios. So that is a priority, bring down debt. We made a significant $40 million payment on our credit facility in the quarter, and you'll see us continue on that path. Second is fund exploration, continue ensuring that our exploration budgets are well funded. Organic growth is the cheapest growth we can provide our shareholders with. It's where we can get our hands on the biggest value opportunities for our shareholders. So you'll see us allocating capital to bringing down debt, allocating capital to ensure our exploration programs remain well funded. We have a lot of exciting high-value opportunities in the portfolio. Also, reserve replacement at the mines is key. And then, how do we start returning, you know, to our shareholders? Dividends is an option.
Jorge, we've lost your audio. Can we try you again, Jorge? Bear with us a moment as we get Jorge back on here, although Greg, I know that's something that he's talked about a bit before with the returning capital to shareholders. They do have the share buyback program that hopefully we can get Jorge to touch on when we have him back with us here.
Yeah, no, absolutely. Buybacks are always great, and it's just hard when trying to attract new investors into the sector when and people can get 5% returns now on short-term debt. So it's just a hard environment to attract new investors, especially as there's nothing wrong, but as the price of silver kind of stays stagnant in this $23 range, and gold kind of stagnates on this $2,000 an ounce basically. So everything's great for Fortuna, but to just to attract investors, it's a lot very complicated to attract that spark into the industry right now.
On the other hand, I mean, you invest in equities for equity rates of return, not 5% on a T-bill or something. I don't care about 5%. That's not keeping up with real inflation. So I look at a stock like Fortuna, and intrinsically and fundamentally, it's crazily undervalued. I mean, it trades at a big discount to book value. And so, I mean, if they're going to put a 3% dividend on it or whatever, that doesn't really attract me. What attracts me is at some point we're going to see a sustained move over 2,000 in gold and into the high 20s on silver, and one that won't get banged down by the manipulators. And that's when you're going to see stocks like Fortuna double and triple. And that's what people are playing mining stocks for, not a dividend. I mean, if I want 5%, I'll put it in 3-month T-bills.
No, absolutely. Listen, no one is a bigger believer in the doom of fiat than me, but that doesn't mean that the current market won't dictate. And I also think Fortuna is and a lot of the other mining companies are undervalued. But while we're waiting for the price of gold and silver to rise to really boost the value of these companies, in the meantime, I do think it's great to have a position in the portfolio as they are undervalued. But it's definitely just trying to draw some spark that can happen, say, today versus waiting for that price to rise in the future.
Is Jorge back with us?
Sorry, do you hear me now?
Nope.
Yes.
Sure.
Yeah, sorry about that. Well, I agree that in this rates environment, return to shareholders becomes even more topical, and our business is a capital intensive business, so it's key for us that we balance that. And in the case of Fortuna, we're coming out of that capital intensive phase that we all cycle through in mining, and return to shareholders. Yeah, it's a topical issue. Right now, as I said, priorities for us: bring down debt. We mining companies need fortress balance sheets, and organic growth, that's key. And then return to shareholders and share buybacks. Those have to be opportunistic depending on where you see your value, and a special dividend or other means, more regular dividend. For me, a dividend needs to meet 2 criteria: needs to be meaningful and needs to be sustainable, right? Otherwise, you will not get value for that dividend, right? So building that with a portfolio of long-lived assets that give you that predictability, with good assets that provide the cash flows to pay a dividend, a meaningful dividend, is key, right? And it takes work and building a portfolio that can support that. Yeah.
And Jorge, what is the thought process amongst the dividend versus a share buyback? What do you look at in terms of some of those different methods of returning shareholder capital?
the buybacks in my mind are opportunistic, right? You do the buyback when you take a position on what's your value, your NAV, and where your shares are trading at, and then you become active on the buyback. We have a share buyback in place, and we're looking to reinitiate our share buyback today. No, I think if you ask most mining companies today, they'll find a strong case for share buybacks, right? And we're in that boat. And also the dividend. But again, I see a lot of companies paying dividend for the wrong reason. I see a lot of companies paying 0.004 cents per share, just to say that they pay a dividend. No, I mean, to your point, Greg, I mean, you want a meaningful dividend and one that gives you predictability, right? And that's what makes sense. That's good business sense. And we want to get there. Yeah, absolutely.
No, that's great. And I mean, you know, if the price of gold and silver went higher on a, you know, sooner than, you know, expected, I mean, that could be something that to be very excited for Fortuna and investors in the company as a whole, basically.
Yeah.
I mean, I would point to B2 Gold. It pays a 5% dividend. It's among the highest that I'm aware of in the mining stock industry, and it's not helping B2 Gold stock right now. So, I mean, the way I look at it, I mean, you generated 70 million of free cash flow in the third quarter. I don't know if that's going to be repeated successively going forward. You might have some idea of that. But if you've got rate of return opportunities that exceed, you know, even if you put a 5% dividend on the stock, I mean, you have investment opportunities like Diamba Sud that could be absolute home runs. And I'm invested in Fortuna because I have faith that management's going to take the free cash flow and invest it in rates of return that are much higher than I can get investing in T-bills. And
you know, to your point there, you know, we don't make toothpaste or Coke, no? I mean, our business is different, right? You know, I come across a lot of investors who read and listen a lot to Mr. You know, the Berkshire Hathaway
Buffett.
Crowd, no? The Berkshire Hathaway crowd, Munger and Buffett, and they hate to listen about EBITDA, and they like the dividend and the steady dividend. But Mr. Buffett and Mr. Munger are investors in Coca-Cola, right? And insurance companies. Our business is completely different. Still a business. Still, investors need to demand value creation, value accretion, and a dividend. You know, my background is in a family mining business. So, you know, we dividends, you demand a dividend from your investment. But to your point, we are on an ever depleting business. It's not like Coca-Cola where you have the magical formula. Our business is depleting every day. So we need to invest heavily to replace those reserves. And that's the challenge in our industry, right? Now, we can provide sometimes with a good asset, and that's the challenge. 3 times over our cost. Coke cannot do that, right? We can provide, you know, 3 times margins, 3 times, not 20%, not 30%, 3 times margin, right? So we have to get there. We have to build that portfolio. In Fortuna, we're in that journey, right? Our priorities are strong balance sheet, invest in organic growth. We have an exciting pipeline of opportunities, and other means to return to shareholders via buybacks or the dividend, or if we have a good investment in front of us. We're not deal junkies in Fortuna. In 18 years, we have built 4 mines, 5 mines. You know, We are careful stewards of capital. Capital allocation is something we take very seriously. I don't say that we always get it 100%, but we try to keep our mistakes small. And, there's always risk. We're willing to take it. Yeah.
Okay, that makes a lot of sense. And
All right, so just a quick question. As far as when you guys have the new mines going, has there been any recent development on additional metals to participate in more of the growing EV space for the batteries, any type of lithium deposits, or going into copper to kind of get more of that market share and grow outside of just precious metals?
That's a good question, and we discuss our business strategically, more than quarter to quarter. We sit and reflect on where should we be or where we want to be. I know EV and the transition metals and all of that is topical and in everybody's mind, and but we have decided, and this is a strategic choice, to remain focused on precious metals. We do believe and subscribe strongly to the idea that through human history, across cultures, gold has played and continues to play a pivotal role in the economic system, even from ancient times, right? So today, who's the largest buyer of gold? Who is supporting gold price? Central banks. No? Who's buying gold today? We might be talking about, the investors who are not participating and they want to see a dividend, but the largest purchaser of gold today are central banks, and for the last 2 years, almost central banks. So gold continues to play a pivotal role in bringing order and predictability to the economic system. So we want to be players in that space, and that's where we will remain focused.
Okay. And Jorge, you were talking a bit about some of the ways that you like to deploy capital, and rather than just doing dividends or share buybacks, obviously doing a lot of exploration. And I know you have drill rigs now turning on Diamba Sud, which was part of the Chesser acquisition that you closed on. I believe it was in September. And just curious, now that you're on the ground there and beginning the process, if you could give us an update on how things are going, anything that you've learned so far in the couple of weeks now that you've been active there.
I first have to say that we closed the deal in September, and comes November, and we already have 3 drill rigs turning. So I think that integration ability to hit the ground running is there. A praise to Paul Wheaton, our VP Exploration, to David Whittle, our COO for West Africa, for bringing all of that together quickly, efficiently. And, Diamba Sud today is still a sub-million-ounce deposit. We will not likely build a sub-million-ounce mine, but we have extremely high expectations with respect to the ability to grow Diamba Sud well beyond the million ounces. We have started drilling the main core area of the deposits, trying to help bring a better understanding of the mineralization model, and then gradually stepping out. So, I think by mid next year, we'll be in a much stronger position to start. We should start seeing the outcome of the work we're currently doing, right? Mid next year. I can advance to you that we're drilling, we're hitting the core zones, enhancing the understanding of the deposit, the geologic understanding of the deposit, which is key, before we can start stepping out aggressively, right? So it's a process, and we just have to go through it. So far, so good. I can report that, we haven't found anything that does not support our original thesis.
Well, that's great to hear, and especially it's just been 2 months now that you've been up and running there. So great to hear that things are already in process. And Mr. Kranzler, I will turn it over to you. I know you had a couple questions here today, and why don't you take it from there?
Just a couple here. Speaking of Diamba Sud, or will we get to see drill results from what's going on there now anytime soon?
We are planning for a comprehensive results update for the exploration group at the end of this month of November. There you should see not just the Ambasud, but as I said, more comprehensive update on our exploration activities across the portfolio.
So I just had a couple other mine-specific questions. I mean, Lindero, obviously the all-in sustaining cost this quarter was a function of the fact that you're sequencing right now. And I was just wondering, in terms of the leach pad expansion, when do you expect that to be completed? And how do you think that'll affect production and all-in sustaining costs at Lindero?
The leach pad expansion is is our largest capital project in this year. It was always planned. It was always in the feasibility study, the third year leach pad expansion. And it should be concluded by second half of next year, right? Work has started. We're about 13% advanced. Key consumables, key products that we use, like geomembrane and geotextiles, are arriving on site. The main earthworks contractor is mobilizing, and all of that is advancing well. So it's a large capital project, so it will burden the all-in sustaining cost. I think we should expect to see all-in sustaining cost remaining in the range of $1,600 to $1,700 as this project progresses throughout the coming quarters until it's complete. Yeah.
But any thoughts on what that'll come down to, and will it expand the production at all at Lindero?
No, it's not an expansion project. It's a sustaining project. No, we have at this mine over a decade of mining in the reserves. It's a large gold copper porphyry. It's a big animal. So we need to make room to place all those stones that we mine for leaching. So yeah, it's not an expansion project. It's a sustainability project. Moving forward, post leach pad expansion, we would expect to see all-in sustaining cost gravitating towards the $1,400 per ounce level. No? Remember that in 2022, our all-in sustaining cost at Lindero was $1,142, and it was our largest free cash flow contributor. No, we just have to get this large capital project behind us, and yeah.
Right, understood. And then I just wanted to turn to Yaramoko. I'm forever the optimist, and I'm just wondering, on the back of the recent drilling success, is the goal there just to kind of improve the output and the grade for the remaining life of mine, or do you think there's a chance to extend the life of mine with what you're finding at this point?
The original plan for Yaramoko was for this mine began production in 2016.
Oh.
And its life of mine was to come to an end in 2022. So the mine is larger than what was originally built. It's like twice the size. And now we had a good 2022. We're having a very strong 2023, and we're looking forward to a very strong 2024. And currently we have reserves in the mine plan to mining until 2025, right? We continue exploring and working to see if we can continue rolling that life of mine. And we've been successful over the last 24 months in doing that. So as they say in the financial industry, money managers, past performance is no measure of future success.
Right.
We apply the same here. I cannot guarantee that we'll be able to successfully continue rolling the life of mine, but I can tell you that we're funding the exploration budgets to achieve that, right? Yeah, and we have options. When we look at when I review the exploration targets and the ideas that the exploration team generates, I see legitimate targets. We're not doing crazy stuff just for drilling. There are legitimate targets that we're pursuing, and some of these high grades that have benefited 2023 are the outcome of that exploration. Yeah, absolutely.
Okay, great, thanks. And then just one last question. Obviously, you guys are busy with Diamba Sud, and I'm, again, being an optimist from what I've seen in the presentations, et cetera, I'm excited for it. And hopefully I'll get to visit it when you guys are building the mine or have it built. But are there any other West African projects that you're contemplating or looking at or that are on your radar at this point?
Yeah, throughout Latin America and throughout West Africa, there are a lot of things we monitor. There are a lot of things we like. I have to say that the opportunity flow today, and that changes over time, right? But today, the opportunity flow seems a bit more fluid on the West African side. A bit more opportunity emerging on the West African side. I think Cesar speaks to that, the Diamba Sud, the acquisition of that. But we monitor actively opportunities, in both regions, and that's what we want. That's why we went to West Africa, to enhance the opportunity flow. And I believe we have achieved that. We see a lot in both regions, not just West Africa.
And Jorge, what is the boundary between, obviously you have 5 mines in operation now, you have a lot of targets at Séguéla that you're still looking forward to explore. What's the boundary between when it becomes too much? Obviously you want to grow and you're looking for attractive targets, but is there some point where you don't want to be spread too thin, and how do you go about thinking about that as opportunities come up?
Yeah, talking about strategy, that's another strategic choice we can make, right? We decided to expand into 2 regions, right? So with respect to bandwidth to manage the business, you will not see Fortuna going into a new region, let's say. We're not a global player, we're a regional player. So you'll see Fortuna anchored in West Africa and Latam, right? I don't believe Fortuna today has the bandwidth to effectively manage a 3rd region, for example, right? So we make a strategic choice to stay in these 2 regions, and within the regions, we favor business opportunities in the countries where we already operate, and there are 5 of those, or near neighbors, where we can leverage the management teams and infrastructure that we have in place and do that. So within the regions, for example, in West Africa, we currently have 2 mines. Can we manage a 3rd one in West Africa? Yes, I think we have a team in place, experience, the people, the resources. So I think within the region, we can be a bit more aggressive, thinking about the type of assets that we see. But certainly, we are not looking to expand beyond those regions, because we would lose efficiency and capacity to provide oversight. So 5, 6 mines in the regions where we are, it's something we feel quite comfortable with.
Okay, makes sense. And Dave, was there any other questions you had today, my friend?
All I got.
Okay, and Greg, anything on your side?
No, everything was great. Thank you.
Okay, and Jorge, we do have a few questions coming in from our viewing audience, which of course I'd like to get to. And Jake is asking, what is your gold to silver ratio coming out of the ground right now?
gold to silver ratio coming out of the ground? I'm not sure I understand the question perfectly.
In terms of how much gold you're producing relative to silver.
Yes, yes. Or we produce about 6.5 million ounces of silver a year, 6.5 million ounces of silver a year. On the side of gold is more like 300,000, 350,000 ounces, right? Now, in terms of revenue, no, 78% of revenue is coming from gold and 15% from silver. The balance, as I said at the beginning of the call, is that 5% balance is zinc and lead. Yeah.
Okay, and he was also asking for an update on Sunbird, and if I can add on to that, something that we talked about before, but I think is worth updating in these calls, just any timeline or sequence of some of the different targets at Séguéla that you're moving on towards.
We're doing a lot of work on targets in Séguéla, Sunbird being the major one. At Sunbird, we completed the infill drill program, and we're working to bring now or do the technical work to bring those resources to the reserves inventory. I can advance to you that there is a case for underground mining there now that has emerged. It's not just open pit, but also underground. And we're following on that at Sunbird with engineering work and more drilling to support the underground mine planning. Yeah. And outside of that, we continue drilling at Badior, Barana, and other projects that we have at Séguéla on the pipeline.
Okay, and one thing that we did not touch on yet, but certainly I'm sure you're happy with how this came out, did have a court ruling down at the mine in San Jose, where the court ruled in your favor. I know that's something you've had to deal with over the pretty much throughout this whole year, ever since you had that decision for Semernat. But if you could just remind people who may not have heard that news, and for those who have, just if there's any further appeals or anything that can happen now, or how that situation rests now that you got the court ruling.
Yes, just for background, no, this is a saga that has been going on since October of 2021. My God. So we're very happy to see a second court ruling in our favor on this matter. Really, the arguments that Semernat put forward were surprising, to say the least. And the court didn't give any credit to those surprising arguments. And so I hope that noise is behind us. You know, it's in the word of this type of legal issues, there is always some room to appeal. So I would expect they appeal that court ruling. But I just don't see that going anywhere for them, right? Really, the arguments that they tried to put forward on that annulling resolution they issued in January of this year was really far out. And the court didn't take one single argument that they put in that resolution. Yeah.
Well, I see you have one very happy shareholder over there, Dave Kranzler, who is
yeah, it's been it's when you are having to spend more time with lawyers than with geologists or your mining team, that's a distraction, right? But I think this is behind us. Yeah.
I was just appreciating the diplomacy of Jorge's words there.
Yeah, I had in my scripts and in my mind a whole different set of words.
Yeah, I can imagine.
I have my legal counsel and the Mexican team, begging that I use more kind language.
I just had one quick question, circling back to the potential for underground mining at Sunbird. Is it too early to tell yet, or would you have to tweak the way you process the ore if you're pulling it out from underground?
No changes on metallurgy, so no
Wow.
changes processing. And really the optimization, the introduction of underground is not driven solely by Sunbird. The strip ratio, the overall life of mine strip ratio for Séguéla is around 11. But within that, you have some small pits with higher stripping and other pits with lower stripping. So really, we needed to do an optimization trade-off study to see at what time should underground become an option, particularly in those higher stripping pits.
Mm.
No? And now Sunbird is kind of accelerating us to start doing that work earlier. No, we have a lot of ounces at Sunbird, and the work to date suggests that it will make a lot of sense to get those ounces, a lot of those ounces via underground, not just open pit.
Are the grades getting higher as you go deeper?
We have higher grade zones deeper, absolutely. No, but you can be talking about over 200 meters deep. No, so you start stretching the limits of a pit with topography. You've seen the topography there. It's not flat, right? So we have rolling hills, and you don't want to be moving the hills and things to get to the ore. So underground becomes an option, definitely.
Okay, and one other question about San Jose, although first of all, in terms last thought on the ruling there, just I know imagine it's not your favorite thing to deal with because it's a distraction, although again, given that's the kind of thing that comes up with permitting issues, I think something that is important to investors because you've shown that you handle these things and get through them. Although perhaps onto something a little more fun from there. San Jose, I've heard you mention before that 12 years ago when you went into production, you had a 5-year life of mine, you've doubled the mill capacity, and it's still going. And recently had the discovery of the Yessi vein, where now you have some drill rigs down there. And just curious if there's anything additional that you've learned there. Obviously, it's early for the drill results to come back, but anything that you could share on that?
Yes, Yessi is an exciting discovery, a very exciting discovery. The discovery hole intersected almost 10 meters at 1.2 kilograms silver per ton. That's a silver gold equivalent. No? So when you start measuring grade in kilograms and over width, 10-meter width, you have to get excited, right? But now the work is to understand if this most exciting discovery translates into also an exciting resource reserve, right? And that's a journey, a small journey. We need time. So we are drilling and trying to build geologic understanding and see how meaningful this is. Not from the perspective of a discovery, but from the perspective of mine feed. But everything starts with an exciting discovery, and we got that one under our belts. And we just need some months now to see how successful this translates, how successfully this translates into a sizable high-grade resource, which is everybody's expectation here, right? We need to prove that.
Okay, well, good to see that we're in progress towards doing so. And last one for me, unless Greg or Dave have come up with any additional questions, but just something that obviously has been going on sector-wide with the mining space. Obviously, it's been a challenging and testing bear market over the past year and a half. And I think it was after we stopped recording the last time that you were mentioning your thoughts on how this compared to the other cycles that you've seen in your career doing this, and perhaps you could just share to folks across the mining space, many of whom feel a little beaten up, but just how this compares to previous cycles and anything you might want to impart in terms of what perhaps brings this to an end or has been a turning point in previous times we've been through this.
Yeah, to Greg's point earlier, no, how do you attract in investors to the sector, a dividend or yeah, I think this is one of the toughest markets I seen. I seen difficult markets, for example, in 2000, 99, 2000, that was a most difficult market. But correspondingly, the precious metals at the time, gold and silver, gold was trading at $300 or even lower, and silver was trading at $3-4, right? So sure enough, commodities were very lonely. No mining equities were, mining equities were in the tank. But today we have nominal high prices, and still I find a lot of apathy on the equities, right? But I find explanations for that in the fact that our margins are very constrained, right? For the entire sector. As I said, a decade ago in 2011, we were mining at similar commodity prices for gold, not silver, but for gold. But our all-in sustaining cost 12 years ago was what? Average all-in sustaining cost was sub $1,000, right? Today, average all-in sustaining cost is 1,400, and you're selling gold at 1,900. So what's your, you don't invest in mining for 25% margin, right? You invest for 3 times margin, 300% margin, right? And that means that gold would have to be at $3,000-4,000 at least. I am not promoting gold at $3,000-4,000. I have other peer CEOs that like to do that, and people who are much smarter than me who analyze markets. My job is to provide a company that can perform in any price environment. And so if we believe that gold is going to go higher and silver are going to go higher, you will benefit with that in Fortuna. But if it takes a while for that to happen, and if we have to tolerate in the meantime some crazy swings to the downside, you have to sleep well that your investment in Fortuna is sound, right? And that is my job, right? My job is not to speculate with gold and silver. That's something investors can do according to their investment plans and strategies and whatnot. I am here every day. We're all here. There is 5,000, 6,000 people in Fortuna every day working in high prices, medium, and low prices. So we need to, that's our job, right? So sometimes I feel for the gold precious metals investor, because you have to time when you come in, right? When your thesis, your investment thesis, and I don't have to do that. I'm here every day. So I have other challenges, but not that one.
Well, that certainly is a big enough one, and a lot of challenges that go along with everything you've been doing. And just appreciate you being here, and want to again say congratulations on seeing the results of obviously a couple of decades, but in particular the last 2 years of work in building the mine and really seeing it come through with a strong quarter. So congratulations to you, and to our audience. Again, I'll once mention that's Jorge Ganoza, President and CEO of Fortuna Silver, and Dave Kranzler, Investment Research Dynamics. Thank you as always for joining us. Good to see you. And Greg, it's also a pleasure to have you from Golden Coast Consultants on the show again. So with that said, we will wrap up for today, but hope everybody's having a great day out there. Thanks as always for spending some of your time with us, and we will see you again soon.